And welcome out on a Monday morning, 8/17/2020. And we are live here on our halftime report, our daily show here at Tackle Trading on our YouTube channel, where we go through the stock market and talk about companies, economics, anything in the news that's grabbing our attention, have some fun while we're doing it, and hopefully give you guys some insight out there to help you with your trading day. And we've got the regular crew here today. We've got Matt doing lead analysis here. We got Mark on the back end, chiming in. I guess I'd call you the color guy, Mark. I'm just kind of making up names right now, but you good with that? You good with being the color guy?
Dude, I'm just happy I don't have to pose naked in a George Costanza pose. So you can call me whatever you want. Call me Shirley.
Yeah. Tesla definitely is running and up that chart, and that is now an ongoing conversation for the last week. Everybody thinks I'm a fool. There's no question about it. Matt, breakout on a price upgrade and all that kind of stuff. It might hit 2,000 even before it splits, Matt.
It might hit 2,000 today. All I'm going to say is it was obvious you should not have let Mark out of this bet, which means it was obvious Tesla was going to price appreciate coming out of that split. Splits are typically bullish, not because it does change anything in the underlying fundamentals, but it does change the mindset, the behaviors of how we, view money. And so when a very popular company like Tesla gets, has a 5-to-1 split, and all of a sudden the perception is it goes down on a discount, all of a sudden you have the behavioral mechanisms about consumers and retail, how they see the value of a dollar and they see their money being able to buy more shares. And again, even though it does not change anything about the underlying fundamentals, splits have historically been bullish. And in the environment of 2020, peak euphoria of just everything in the world going up on a company like Tesla, yeah, I think it was fairly obvious that Mark should be very grateful that you were so kind.
No, and that's what we were talking about that for a minute in the lounge this morning with our pro members, is that when there are genuine, exciting news stories, and like Kodak getting a new contract, right? And we'll talk about Kodak a little bit later in the show. But Kodak getting a new contract or something genuinely happening, or the split shares, the market price action in 2020 is off the charts. Bears capitulate immediately. Day traders, swing traders, Robinhood traders pile in, and it creates price action that is, needless to say, exacerbated from what you would normally see in these circumstances in 2020. So yeah, Tim, thank you.
You're welcome, my friend. I'm not too worried about it. It's like when you close a losing trade or a winning trade or something, you're like, oh, if I would have just held on to that, it would have ran all the way up there. I don't care. Once I'm closed, I'm out. My mind is moving forward. I could care less. So you're talking about that in the lounge. I think it's funny what prompted this move on Tesla today, by the way. Wedbush gave them a price upgrade. Now get this, Matt, from 1,800 to 1,900, and the stock is up $131 today.
I gotta get that 1,900 today.
Yeah,
right. Listen, it's 2020. Like if you're not making money in 2020 somehow, then we need to talk, because the market conditions have just been insane.
Listen, retail just got done doing whatever they did over the last week, and they just found out that the 2-to-1, that the 5-to-1 split is happening, and so it's now being priced into the market today.
Yeah, done. I love, once again, this is my favorite market of all time. I hope it never changes. I hope it never changes.
If it never changes, we're going to be talking hyperinflation at some point.
Well, we might.
Well, maybe.
By the way, on today's show, we are going to break down some stimulus stuff that happened over the weekend. Not really a lot, just kind of hunting for a couple of weeks. It seems like the House might be diverted in their attention on getting some stimulus measure done, by the way. I'll get Mark and Matt's take on that. More rhetoric out of China. There's stuff going on politically. The Democratic Convention actually starts tonight digitally. I don't know if that has any market implications and whatnot. Economic data out of housing, Japan. And then really, I would say probably the story of the day that's grabbing my attention is the Berkshire Hathaway 13F filings, and we will take a look at all those things. If you are brand new to our channel, by the way, welcome out. We do this show each and every day that the markets are live, same time, same station. Click subscribe, click the bell, come back and join us on a daily basis. And if you're a veteran, have some fun in the chat today. I love seeing the communication, the participation. It really fuels our energy as well, guys. So we love seeing that. Hashtag Team Tackle as always. Maddie, let's start with the Berkshire Hathaway stuff.
Yeah.
I think that from a market perspective, a news perspective, it is the lead here this morning. And here's one of the companies that he took a stake on. Matt, I went through a bunch of the data in detail, by the way, but I'd say the major takeaway is Buffett buys gold. Now, what does that mean for you, Matt?
Well, again, let's be clear here. Buffett's buying Barrick Gold, the company. He's not buying gold, although they are correlated and that. But I have seen some headlines out there. Buffett buys gold and people think he's actually buying the physical commodity. No, Buffett's buying a company that still pays him a dividend. And I'm willing to bet they pay a decent dividend for Buffett.
And it's cute that, Barrick's ticker symbol is GOLD.
It's one of the best symbols in the business.
I know, and it's so literally you could get away with the headline Buffett buys gold.
Oh, you do, and they are getting away. I don't know if they're getting away with it. They're getting called out on it, but even Zero Hedge put it out there. Buffett buys gold. I'm like, as a gold guy, I'm very happy, but he's actually buying Barrick Gold, the company, and we haven't seen everything disclosed here, but I'm willing to bet he's getting paid a very decent dividend. The question I have for you guys, let's start here. What does Buffett finally capitulating in buying gold? And I mean that word capitulation here. I chose that word carefully because Buffett has been historically anti-gold. I mean, we can go Google all the bad comments Buffett has made about gold in the past, and it's basically a pet rock. It's a shiny little metal. It doesn't have a lot of industrial utilization. But what does that signify for you that Buffett is getting out of airlines? He's reducing his exposure in banks, and he's been very, very big in industrials, very big in the financial sector, especially in the last 20 years. What does that signify to you that he's getting out of airlines? He's reducing his exposure in the banks, including, I believe, eliminating his position in JP Morgan. And he's only taken a 1% stake in Barrick Gold here, right about 600 million against the market cap of about 48 billion. But does this signify something significant with Buffett getting into gold, in your guys' opinion?
Well, at a minimum, it's symbolic, right? Like anybody that market knows that Buffett's been, he's had some derogatory comments about gold over the years. And so
Yes.
at a minimum, it's symbolic. From a personal level, and I'm sure you feel the same, both of my brothers, that there's this validation. With mad respects to Warren Buffett, that's one of the things I hate about Dave Portnoy the most. And while he has some charismatic, likable things, I'm like, dude, mocking Warren Buffett is I'll take Buffett at 95 over your average human being at any other age, right? Like Buffett's amazing. He's had an amazing career. He taught us so much.
The anti-Buffett crowd is starting to really get to me, to the point where it's like now it's the Buffett crowd is also just the boomer crowd.
Yeah,
right?
listen,
it's come on, get out of here with that nonsense.
Yeah, just get out of there. So it's definitely symbolic. It's there's this feeling of validation, but I don't think Buffett was doing any of those things. Buffett till his final day will go down swinging, making the best investments for his people as he can. It is, and I just think Buffett capitulate, if this is the word that we want to use. I think the case for gold and a case against fiat and the case for inflationary problems is so obvious that Buffett's just like, I can't ignore that anymore.
You must have listened to the podcast the last 2 weeks.
Because we believe that, right? We've been pounding that table for 18 straight months. But I think it is now just so obvious to everyone that we have systematic issues in this country. It will likely lead to a high level inflation with a deteriorating economic base. You just can't give money out for free not increase productivity, and not have there be a consequence at some point. You just can't.
Buffett is one of the most savvy investors in the history of investing. There's no doubt about that. I'm trying not to read too much into Buffett buying into gold, but I do believe that
Sure.
he understands what this does symbolize. I mean, he's fully aware of that. He knows that him getting into a gold position, what the news headlines are going to read. He understands what it signifies to the populace. There's a reason, Barrick Gold right now is up 11% on the day, pushing another breakout. In a world where you really are embracing modern monetary theory. I mean, you really are embracing this to the point of a speed that is historically unprecedented. We've never fully embraced these types of modern monetary theory. There's nothing modern about it, and that's what drives me crazy, Tim. But we've never seen an economic and monetary potential solution be adopted as fast as we're adopting these very, very dovish monetary policies. And if you're Buffett, and I guess we're all trying to interpret the 13F from over the weekend, but if you're Buffett and you're saying, okay, I'm going to go take a 1% stake in Barrick, when historically I have been very, very, very slow on gold. I've been anti-gold. I've had many derogatory comments regarding gold. It's gotta mean something that he's taken a position in gold, given the economic response we've had in the last 5 months that is literally unprecedented, even when you data back and compare it to what we did in 2008. When you look at percentage of GDP with the stimulus as we're doing today versus 08 and 09, I mean, it's not even close. And Buffett didn't capitulate in 08, guys. He didn't capitulate in 09.
He famously bought American.
Yeah.
I mean, that will go down in the history books when somebody writes 200 years from now, the history of the U.S. markets. Buffett buying American, helping provide stability, which led to
He was the Ford Motor Company of the 1940s.
It was one of the most iconic moments in the history of the markets when Buffett bought American in the face of panic, in the face of everything. He says, I believe in America and I'm buying.
Okay, so what does that say now? Because now we're 10 years later and he's dumping those stocks, Mark.
It says
and now
America
he's
is
gold.
not the same country and we are a gigantic shit show right now. And there is real systematic reason for concern. Now, if I sound a little negative, for the last 48 hours, I've been refining a 7,800 word article on the bearish arguments against the market. So that's lingering on me, and that will be released sometime in the next 48 hours on tradingjustice.com.
Here's the thing about all of that, and I love the perspective here in the conversation. Matt, I don't think on its own, if you took the purchase in a vacuum, I don't think it means as much as maybe some people are reading into it. I think it's symbolic. I definitely think it's symbolic.
I think it's more symbolic than it is anything else, because he is capitulating against something he's been fairly anti on for
even
a very
last
long
year.
time.
Last year, forever. You guys talk about 2009 when he came in and bought the stock market. In 2019, he was very anti-gold. He said the magical metal was no match for the American metal, which basically means I'm buying stocks over gold all day long. And that was when the market was at an all-time high.
A year later, he's now dumping those American stocks and he's embracing the shiny little pet, precious little metal pet rock we call gold. I do think it's more symbolic in nature, because his stake, he's not taking a Bank of America stake the same way he did in 2008 when he came in and with the billions and billions of arsenal of the Warren Buffett. He didn't do that. It's a 1% position size I say position, a 1% stake in the company, a 600 position size, which would be less than a 1% stake in his portfolio. So to put it in perspective, guys, and Buffett owns many, many, many companies, so it's not the same way as an individual investor, but that's like saying, okay, I'm going to take a 0.5% position size in my portfolio on gold. So he's not exactly coming in full double barrel shotgun, let's get it on. That's why I do believe Buffett did this as a symbolic thing. And again, he gets his cake and he gets to eat it too, because he still gets paid a dividend by going with instead of the commodity that's correlated to gold, he's going with the stock that's correlated with gold, and he's getting paid a dividend. And I'm sure he's going to do cash flow strategies on it as well. So to me, it is symbolic, but that symbolism is so important in the backdrop of what has happened in the last 5 months. At no point in the last 12 years since we've embraced modern monetary theory has Buffett capitulated to gold. In the face of QE1, where we put $1.7 trillion of funding money into the system, in the face of QE2, in the face of QE infinity, where we were pumping $85 billion a month into the market, in the face of zero interest rate policies for an entire decade, Buffett still believed that, getting paid a dividend, having that dividend offset inflation, investing in bonds to offset inflation, that was the methodology that he would go to offset inflation. American stocks, dividend paying stocks, cash flow strategies. And now 5 months after the pandemic, and 3-4 months after the economic response from the government, and 4 months later after the extremely dovish response, he didn't even go gold when they were doing $150 billion a month last year in 2019. In September through December last year, we were doing 150 billion a month in repo actions, and Buffett still had his anti-gold thesis. This does signify something to me, that Buffett is saying to the investing community to a certain extent. I'm a little concerned. I'm a little concerned that these inflationary measures that historically have been utilized to offset inflation are no longer economically viable. Systems are changing. And even at, 91 years old now? Even at 91 years old, I have to update my systems to fit the ever-changing economic and monetary condition. I do think it's more symbolic in nature, but I think that symbolism is very, very important in this economic and monetary environment where people are truly trying to understand how to offset inflation over the next 10 years.
Man, I'm just happy that I don't have to, because every time I write the commodity report and I tried to tie the boomerang bottom fishing philosophy with Warren Buffett and it's on gold, I always have to write a paragraph apologizing because I know Warren Buffett doesn't believe in gold, but these general principles apply. I'm just glad I never have to write those words.
Not only that, Mark, I mean, maybe even have to reevaluate the idea of bottom fishing from a chart perspective. This old idea of buy low, sell high. Buffett's buying gold up here at the 52-week high. He's selling banks at the 52-week low ranges.
Mark, Tim,
I mean, think
wonderful,
about that.
wonderful observation.
That was spot
wonderful observation. Because when we were talking about him buying America, Mark, back in 08 and 09, we were talking at 80 to 90% decrease in prices in those banks. That's what we were talking about. Barrick Gold is near the all-time high, breaking out of an all-time high. And all of a sudden, Buffett says, this is so crazy out there. I'm buying at the high. And Barrick's PE ratio, guys. Now, mind you, Barrick Gold is a tackle 25 stock. This is one of our favorite gold companies, no doubt about it. But Barrick Gold's PE ratio is nowhere near where Buffett would typically look at valuation. You're not getting deep value based on current fundamentals in Barrick Gold. You're basically saying I'm willing to pay the higher price. Buffett's saying, guys, I'm willing to pay the higher price. That's a wonderful point, Tim.
Yeah. Well, and then when you take the totality of all of it together, I think there's actually
Buffett doesn't pay the higher price. Somebody tell me the last time Buffett paid the higher price.
In fact, I'm going to follow Warren Buffett. Instead of 0.1 deltas, I'm going to go 1.12 deltas. I'm going to just get crazy with it.
Instead of a 10 delta, you're going to a 12 delta.
Yeah, I'm going to go crazy with it.
Listen, hold your roll there, bro.
I want to get you guys' take once we look at the totality of all the moves that he made that were notable. Matt, let's flash through a couple of companies here. Wells Fargo Wells Fargo, he sold 85 million shares, or 26% of his stake. He's down to about 230 million shares. It's down here at its 52-week lows on the bottom. JP Morgan, he sold 35 million shares, 62% of the stake of that bank. He's down to 22 million shares. So he sold over half of his stake on that one. PNC Financial Group, he sold 42% of his stake in PNC. MT Bancorp, he sold 846,000 shares as well. MTB as well. Bank of New York Mellon, BNY, he sold 9% of his bank shares there. US Bank, he sold 10% of his bank shares there.
Okay, think about this. This together, and I think it's really clear, and you can tell me what you think of this. If you don't think the Fed is ever getting off a zero rate interest policy, buy gold, sell banks makes a freaking lot of sense, doesn't it?
Yeah. And he got rid of almost all of his banks. But Marky, even outside of banks, why'd he dump Visa and MasterCard, right? I mean, we're not talking about, the same kind of credit risk. I mean, Visa's a transaction company. He sold 5% of his stake there, 7% of his stake in MasterCard.
Well, I mean, but here's the thing. Visa and MasterCard have been excellent companies for 12 years, and you have to pay a premium. Now, their valuation isn't off the chart like a lot of other things, but you have always had to pay a premium for Visa and MasterCard because of how well they perform and the lack of risk. Like, I read in detail both MasterCard and Visa's last earnings report.
Mm-hmm.
I love credit card companies, historically love them. And listen, they're not churning out the money like they have been in the past. There is a lot of things. Now, if everything returns to normal, right? Visa, MasterCard pick up where they left. Buffett's probably, put myself in the mind of Buffett is like, listen, it's just not worth paying the premium on these companies right now.
Mm-hmm.
That's what I.
And I agree. I just want to correct something I said. My favorite I said was gold. No, it's Newmont Mining. Newmont Mining is the Tackle 25 stock. Those two stocks, Newmont Mining and gold, you can pretty much put them pretty much co-equals there. They're both very, very, very good gold miners. They're the two biggest gold miners. When we were putting in Tackle 25, it was really kind of the same discussion we had on those two companies that we had on kind of the home builders. It's like you might pick your favorite, but they're all kind of run together and they're all fairly similar to one another. I'd put Barrick Gold and Newmont Mining there very similar in terms of the fundamental nature of it. I mean, honestly, it's flip a coin which one you like the better. Personally, I like Newmont a little bit more than I like Barrick Gold.
Mm-hmm, mm-hmm. Yeah, I love Newmont Mining as well.
Yeah.
And by the way, the only real notable things that Buffett purchased, we know about the OXY deal, which by the way is only like $200 million, picking up, Occidental Petroleum. We also know that he held on to his Apple shares, $90 billion of Apple stock he's holding on to. His next largest position is $20 billion, Mark.
He loves him some Apple.
And he bought Kroger, KR. So he did add a grocery store. He added a REIT as well in STOR. So Buffett buys Barrick Gold, a REIT, a grocery store. He holds Apple and he sells his banks.
I think he is like Tackle 25 member now. I think that's pretty much par for the course with Tackle 25 philosophy, no doubt about that.
I'm sorry, crazy. I love Warren Buffett. I love Warren Buffett.
I'm not gonna listen. I get it, going out there and saying something negative about Warren Buffett gets you headlines. I get it. That's never gonna happen here. We love Warren Buffett. He's the oracle for a reason.
And I think it tells you a lot about his view of the economy and the recovery and the potential for 2021 and all those kind of things. I mean, I don't like to make too much of a, one news headline here or there, but this is a 13F filing from the greatest investor in the history of the world. So I don't know. I'm reading the tea leaves, guys, and I think he's saying a lot about what he thinks of the economy, quite frankly. I really do. Interesting, as always, those 13F filings, and we do love.
Honestly, Tim, I've went through the 13F, and there's not one thing in that 13F that I would disagree with.
Yeah. And Jimbo in the chat at Tim, which REIT did Buffett take a position in? STOR was the REIT. I've never traded that one, but
that is not the first time he has purchased STOR. He has that he. I
I'm
think
not
that's
getting
an.
anything on STOR.
Is that not? I don't trade that one, Mark. Is that one a?
No, I mean I know which one you're talking about.
Yeah. But that
Listen,
was long.
Thinkorswim is all funky right now. So
Yeah.
Yeah. All right, back through the markets here for a few minutes here, Matt. We'll break down the news over the weekend and whatnot. We are now pushing up closer to that all-time high. We couldn't get there last week, 33.80.
By the way, I want to be clear. Something. I don't think Buffett's betting against America here. Gold, especially a position in gold, is looking at an economic and monetary perspective from a global position, not a.
no,
isolation.
it is not a bet against America. It is. I mean, I think when you look at it in totality, moving away from the banks from an investing point of view, it makes sense, especially if you think it's going to be a prolonged zero interest rate environment. That's not betting America. That's just recognizing the reality of the Fed.
Especially if you have word that gold might be part of some next reserve system.
Yeah, moving out of premium prices on great companies that you don't see the growth in the next few years. That's not a bet against America. That's just prudent investing in MasterCard and Visa. So that's not a bet of America. That's just he's just prudently investing right now.
Yeah, I'll save my thoughts on gold and reserve for the podcast, obviously, but there is a lot of speculation, a lot of chatter that gold will be part of whatever that next reserve currency is.
And looking forward to that podcast. We're actually going to cut that on a Tuesday. So if you're a regular podcast listener, look forward to it.
By the way, my personal belief, and I'll detail this on the pod, is that the dollar will be part of the next reserve currency as well.
I can't wait to get both of your perspectives. We talk about it all the time, but how that thing shakes itself out moving forward, it's going to be a fun conversation. Matt, we're going to hit an all-time high this week. What do you think?
I think so. I mean, when you're looking at this from a technical perspective, if you just remove all the news, all the hypotheticals, I know we have some retail earnings this week and we got some economic reports this week. And as always, we got to look at all the geopolitical nonsense that we have to navigate through the financial world. But if you just discount all the news and you just look at this from a technical perspective, looking at the price action, you were overextended coming into that all-time high. You've been consolidating now for the better part of over a week now as you've been approaching that all-time high. And then looking at this from an intraday perspective, shockingly, what happens on the overnight action, the futures market opens up. You see price appreciation coming into the futures market. A lot of that was on the backs of, stop me if you heard this before, somebody doing more stimulus.
Yeah, we've heard that.
Go ahead.
More liquidity.
China, People's Bank of China pumping in over 100 billion in fresh new liquidity. Japan opens up. We see a little bit of negative reaction in the futures market. Let me kind of get in here. You see a little bit of a negative reaction with the Japanese economic report that came out over the weekend. Japan contracted at 27.8% year over year, which is par for the course in GDP reports for this quarter. Honestly, you can say they were better. You can say some are worse. All of these GDP numbers from around the world are absolutely terrible. So there's a little bit of, anti-Japanese economic report coming into the market. But then, like anything that offsets any negative economic situation in 2020, China, People's Bank of China injecting $100 billion. And you saw a little bit of price appreciation coming into that when that news hit the wire last night. Coming into the cash open this morning, you were elevated coming into that resistance channel. And what's happened? That resistance has held again from an intraday perspective. But the more you're putting pressure on it, you're putting pressure on this potential breakout here that has been starting to form over the last 5 days. And like Coach Frank always says, as you get a little bit overextended, and Toss is obviously a little slow here today, but as you're getting a little overextended, as you're coming into those breakout channels, a lot of times you consolidate, you form that consolidation high base. You have a very clean trigger on that intraday perspective. And, if the breakout happens, I fully expect that all-time high to be hit at 33.97. And then I fully expect that to eventually be broken. Could it happen this week? Yeah, I'm going to say it happens this week. I think that the technical support a breakout here a breakout after 4, 5, 6 days of consolidation typically leads to price appreciation. And I think we hit the all-time high and then eventually break that all-time high. And yeah, if you had to put me in a corner predicting this week, I would say we hit it this week. Get ready for the headlines, guys. Get ready for.
I believe the market wants it. It's just when, not if. And I would put the odds on this week, at least us touching, testing, and trying for that breakout, in my personal opinion. I'll tell you, I saw a lot of street upgrades over the weekend. One of them included Goldman Sachs, where they raised their price target all the way up to 3,600 on the S&P 500. The only risk they actually cited, though, Mark, was the election.
Oh, I thought you were talking about Goldman Sachs getting upgrade. I was like, no, I wouldn't. If we're playing the agree or disagree game, I would disagree with that one.
I would disagree. No, they're raising the market.
Matt disagrees with an upgrade on Goldman.
Well, let's see if you both.
Shocking news of the day.
Let's see if you agree or disagree with this from Goldman on the broad market. S&P $3,600 target by the end of the year, Mark. It's only 200 points above where we are at 7%. That includes the fall time risk, the election risk. We know the volatility that can come in the months of October and November, especially in an election year like this. Would you have a bullish ranking on the markets right now?
That is a really difficult question. Do I think 3,600 is possible? 100%. If you said yes or no, 3,600, and you made me make a bet, I'd say yes, because that's this market this year.
3,600 by what time frame though?
By end of year,
End of year.
December 31st.
You're talking what about another? What would that be? About 7%?
Yeah, like there's so much liquidity, there's so much euphoria, the algo's in control. I mean, when you think about the massive amount of negative news that does not seem to move the market at all, what is, right? This market is unlike, I don't know, it's weird.
Listen, all I'm saying is if we do get 3,600, I'm winning some Volkers in the podcast prediction. I'm winning a lot of Volkers in the podcast prediction. So just for me to be right, yes. But guys, we haven't even, we're now entering into mid-August. Obviously September and October from a seasonality perspective are two of the, less performing months. I believe, September and October have the two least calendar months that we see price appreciation. So it's going to be interesting to see where we start out. But that mid-October through mid-December, that 2-month stretch, guys, there is a lot of historical evidence of Santa Claus rallies coming to town.
Yeah.
And so if we get a traditional Santa Claus rally in this euphoria of a market condition, 3,600 it certainly could be hit by the end of the year.
Yeah, and once again, I don't think anything is based on reality here. But if the market can go this high and this euphoric in this last 100 days based on a million uncertainties, what happened if something actually good happens, right? I don't know, man.
If something good happens, Mark, I'll tell you what could happen. We could get into the good news is bad news.
Yeah, so I will say Goldman, yes.
That's actually, I agree with Matt on that, Mark. I want to, let's not move past that. I mean, if the market gets too good.
If you want the market at 3,600, you want shitty economic reports. I'm just telling you. I'm just telling you right now. Good economic data, the market will probably sell on because you'll see the headlines of Fed raising interest rates.
No, it's
that's the concern, Hero. That's the concern from a seasonality perspective, is that September to mid-October type environment where you have traditionally 4 to 6 weeks of some negative pressures on the market. And so you do have some historical evidence of seasonality that area of the market between September and mid-October where it's not as good. And it doesn't mean that we have, massive crashes all the time in those environments. But when you look at some of the worst case scenarios we've had in the marketplace, you are talking those time frames. You're talking 2008. When was the worst month in the market in 2008? It was a 30% drop between September and October. All right, that was kind of that time frame. Now that was also just so happened to be when Lehman Brothers went bankrupt and the entire market woke up to the problems of not just Lehman Brothers, but what Bear Stearns and AIG represented even before that. When you're looking at kind of that moment during the dot-com environment, 9/11, obviously September, and we saw another 10-15% decrease after that. 1987, you're talking October. I mean, you can go back all the way to, and this is why the statistics and calendars can be a little confusing, because there's like 5 moments in our market history over the last 100 years that were some of the most painful market environments. And is it just random happen chance, Mark? This would be more of a question for a statistical nerd like you. Is those 5 moments in time over the course of the last 100 years, are those data points that you would discount because they just so hypothetically happened in that same calendar? Or does this become a little bit more important to you? Because if you discount those 5 moments, Mark, September and October are not the worst performing months in market history.
From a statistical, listen, I'm a data nerd. I still hated my stat classes in graduate school. Oh my gosh, they were tedious. 5 data points isn't statistically significant. It's just not. So.
Well, and I can pull more than that, though. I'm just talking about if you discount those 5, the average performance of September and October is not nearly as bad as if.
Yeah, and that's just random. I mean, that's just random statistical analysis you could do too. Let's say you have 100 data points and you take out the 5 or 10 extremes, give you a nice median, do your whole mean median thing, we learned that in high school and junior high. Yeah, so listen, seasonality is cute. I don't adhere to it.
I agree and I disagree. I'll disagree with the one point. I'll tell you why, Mark. I think there's a group consciousness around October that there's just people are a little bit more on edge. There's a group consciousness around the Christmas rally where there's just a slight probability. I'm not a believer that systems can be designed based on seasonality alone, Mark, but I wouldn't discount the just.
Well, I'm not saying seasonality statistical significance is not there. I think there's some very compelling data. I guess my point, which I didn't make, is you'll see it in the technicals.
Mm-hmm.
You'll see it in the technicals. Mm-hmm. Like a breakout will be a breakout, whether it happens in February, April, or October. A pullback to a moving average. I mean, so your technicals, you'll see it all. And so I just don't want one more thing, weighing down my brain, creating paralysis analysis. So that's why I don't follow seasonality, because I think you'll see it in the technicals, and so you don't need to spend that brain power on it. That's just me though.
And I don't think you should spend the month of October in a bunker in cash, just worried about the markets crashing. Obviously, I think it can be overstated too. So
I spend every week.
There's going to be so many overstated seasonality election. It's going to be all over the board. I need to do some research on seasonality in conjunction with elections. But I mean, anybody could be like, well, it's 2020. Like, those scenarios are the seasonality scenarios are built on a lot of it's built on market cycle mechanics, and market cycle mechanics have been blown out of the water for the last 3 years. Mm-hmm. So we could do all the data in the world on market mechanics, seasonality, market cycle, historical probabilities. But the reality is, somebody point to me a year, and this kind of goes to Buffett capitulating and buying Barrick. Somebody point to me a year where we could have projected that Buffett was going to buy gold. No, I mean, economic scenarios, guys, think about it. If you were to ask me coming into the prediction podcast, what are the economic scenarios that would force Buffett to buy gold after everything Buffett has said about gold? And I would say they don't exist this year. And yet 7-8 months into the year, they existed. So I think there's going to be a lot in the traditional media on seasonality. I'm sure we'll even talk about seasonality because I think it's an important topic to understand. But I do agree with Mark that seasonality can be thrown out the window in this market condition.
Mm-hmm. Yeah, and the thing about it is, and whenever if a seasonality advocate says, "Well, we'll look at this," and my simple response is, "All right, go show me the data points of all the times in October or August or July where the federal government and the Fed have put in trillions and trillions and trillions and trillions of dollars into the economy, and then we have something to compare it to." Otherwise, we are in an anomaly, a unique situation, in that you simply can't. You don't have any precedent. You don't have any precedent.
So,
Mhm.
no, and again, there to Tim's point, which I think is a wonderful point, there is some behavioral mechanisms there. People have muscle memory. They do. Hedge funds have muscle memory. They understand this, but I do think you can throw a lot of that analysis out the window in 2020. We've never seen an environment that economically, monetarily, and fiscal policy like we're seeing in 2020. I mean, it's just, again, guys, all you got to point to is Buffett buying gold, and the scenarios that it would lead Buffett buying gold are like, wow. So I do think you can throw seasonality out the window a little bit this year.
Other areas I want to hit, it's kind of almost like an
Hey,
obligation
very
here
question.
these days.
I do,
Yeah.
I do love Hero's comment. Of course, 2020 is different. Government admits to UFOs and sea monsters, but no one bats an eye. God, I love and hate 2020 so much, Hero. No doubt about that. Guys, we're 80 days away from the election. Marquise asked a question. Do you guys think it is the most important election of our lifetime? And yes or no, does that also have a market implication for you guys?
The most no, it's the most divisive I've ever seen elections. That's
It's
for
not the most
sure.
important.
But like, what? I mean, not to be flippant, but what you're gonna have? Who you're gonna elect? Side A, who's gonna spend trillions and trillions and trillions of dollars, or side B, who's gonna spend trillions and trillions and trillions of dollars? Both sides are gonna jack up the debt. Wake me up when I have a party that's actually conservative, then I'll get excited. So,
we always think the current is the most important because we're living through it. The most important election of our lifetimes, guys, was 1980. That was the most important election of
I
our
was just
lifetime.
thinking about Reagan in 80.
It's not even close. You can't compare the 2020 election with the importance and the backdrop of the 1980 election. You're literally talking about the change of our entire economic philosophy, of our monetary policy, of gold versus fiat. I mean, the 1980 election, and again, I was only 3 years old, but I was still alive. So I have to put that in our lifetime. I would say the 1980 election, in terms of the economic significance of what we were doing to what we now were doing from both a fiscal and a monetary perspective, was to me the most important election of our lifetime. That is the election where I look back historically and say that's where our underlying economic philosophy changed. That's where the Keynesian economic philosophy versus the Ayn Rand economic philosophy really took hold, was 1980. That was when our central bank really capitulated. That's when Volcker came in and did what Volcker had to do. So yeah, I look back to 1980, and especially we're in the heart of the Cold War. Guys, for those of you that were not a child of the 80s, I don't think they understand the significance of what the Cold War was to a lot of people that were born in the 70s and 60s growing up in that environment. So no, I don't look at the 2020 election. And I always like to be historically, I always like to think about the backdrop of history in those moments. And I would say 1980 was, to me, in my lifetime, the election of Ronald Reagan was the most important political, economic, and geopolitical election of our lifetimes.
Well, this is plain hindsight, but I think I'd have to think through this one, but I might be able to make an argument for 2000. It shaped our foreign policy quite a bit in different ways that, and especially what happened in the next 10 years.
Didn't, though. The election didn't. That scenario, obviously, that election and what led to the next 20 years of the war on terror, obviously, that is very significant. But that was not the backdrop going into that. That was September. We had a month and a half before the, that was post-election. So I just the backdrop coming into 1980 was far more significant for me than the backdrop coming into 2000.
I love the question. It's a great thought.
It's a great question. It's a great debate. And I would love talking about Marquise for like the next, because I geek out on stuff.
I could go through every
politics,
election.
economics,
Absolutely.
history. Are you kidding me? That is a question I absolutely love. For me, it's 1980.
Yeah.
Listen, I think you guys are all overlooking the 1852 election between Franklin Pierce and General Winfield Scott, the Whig nominee. I mean, if you want to talk about theater, 1852.
Yeah. I got a tidbit for you after this show
Thank
about
you,
that
Mark.
election, actually.
Again, the question was our lifetime.
We
I
can
knew
get
you
to
were
it.
old. But
Remind
wow.
me, Mark. I want to talk about that 1852 election, and I'm not joking. Let's move on through the markets here, guys. I want to get you guys' take on a couple of areas. China, there's just more rhetoric over the weekend. Might throw Baba into the companies that are being targeted, by the way. Yahweh is under surveillance, 90 days to get the ByteDance deal done with TikTok.
Do you know
Marky,
what blows up any hypothetical Bob in the news? China pumping $100 billion worth of new money into the system.
and they threw money into the system as
Yeah.
well. I mean, guys, what you read on China right now? I mean, that's a pretty good move to the upside on the bullish side.
Well, I mean,
It's
that's the
still a stay
liquidity
away from me.
injection, right?
Yeah.
That's the liquidity injection. So
Yeah.
Listen, it's still a stay away from me because I think China is going to be a political issue in the U.S. and I believe they're and right or wrong. I'm not saying one way or the other. I just believe it's going to be a very, very hot political issue over the next 80 days, and I don't think the Trump administration is done throwing darts there.
I don't either. In fact, it seems obvious that they're going to increase the rhetoric and the targets. There's no question about it. Other one, stimulus, obligatory update on stimulus talks. There really wasn't anything over the weekend that I saw, Mark. It seems like we're weeks away, if not even further than that. And I do not want to get into the debate about the post office, but I just got a simple question for you in regards to stimulus on it. If the conversation changes as to what politicians are focused on, doesn't that have to lower the probability of stimulus getting passed?
every day that passes between now and the election, I think smidgens it lower. And I don't know what the day is, that line of no return. I definitely adamantly believe there is a day where the parties say, we're done. One of them says, nope,
What
we're
are they
done.
going to do, guys? I mean, come on.
What are they going to be
do?
debating this
I
6
mean,
weeks before the election?
Seriously, Pelosi literally is trying to call back Congress to have a vote on the postal situation. I'm not going to get into the politics of that either because I think it's stupid. But to me, Pelosi's willing to do that, but Pelosi's not willing to bring back Congress to debate the issue of stimulus to the American people. And no, it's not going to happen. Pelosi's bringing back the UPS because that's a political issue right now. All of this is about politics. The next 8 days are all about politics, guys. If we elect our representative officials to represent America, there is not going to be one aspect of them representing America. They're representing themselves and the party line over the next 80 days, and that's going to be all politicians, and they drive me crazy.
Mark, there's been an assumption if there's no stimulus deal, the market's going to sell off.
Pelosi should be criticized.
I agree.
Pelosi should be criticized for bringing back Congress for the UPS issue, not the UPS, but the postal issue,
USPS,
which is a political issue, but not for a stimulus conversation to try to bridge the gap with the Republicans. Pelosi should be criticized for this.
Is it possible the market doesn't care at all, Mark? I mean, there's been this assumption there's no stimulus, market sells, right?
Oh, listen,
does
hey,
that have
listen.
to happen?
Okay, logically, a word that is out of vogue in the last 6 months, but logically, one of the things that have helped propel the V-shape or whatever semblance of V-shape or the recovery, whatever phrase you want to do in retail sales and in all that, has been the government. It hasn't been on the health of the economy. It's that the government's put in trillions and trillions and trillions of dollars. The economy does not recover at the pace that it has anywhere close to it without additional stimulus. There is universal consensus on that. So you're not going to have as fast recovery. Now, that is a separate analysis than will the algo day trading euphoric crowd even care in the short term. Eventually, it will show up in the stats, right? Eventually, it will show up in the retail sales numbers. Eventually, it will show up in all of in earnings reports. But that's like another day, right? We'll worry about that when it comes. So eventually you have to pay the piper. In the short term, man, listen, there's so many things that could, should, maybe would send the market down. Market doesn't care. What are we, 15 days above the 9 on the S&P 500 now?
Dude, it's been just a juggernaut in that regard, but the volatility is obviously lighting up, which just kind of tells me consistent, steady trend, and algos and traders and everything else buying it up as we're fading higher up these charts. And whenever Matt brings up the VIX, I'm just curious. I'll just go silent.
I got nothing to say.
All right.
No, I got nothing to say. I'm waiting on some very, very important and very detailed analysis on what the VIX means at 21.85 at an all-time high versus at 11 last time it was.
Well, the NASDAQ's about to break out in other news, as well as we need to take a look at crude
I
oil.
figured you want to run from that one.
By the way, that NQ contract's looking pretty good. That 3-day pivot, you didn't get many of those in these
Listen,
markets
all
for
I'm
quite some
saying is,
time.
when I took my stance on the VIX, you guys
You
were
just
all
won't let that one
poo-pooing
go.
and crowing and saying you're insane. But yet, how many people now analyze the VIX all the time? And who's making fun of the VIX now? Everybody makes fun of the VIX now. I
Bro.
was on an island 5 years ago. I was on an island 2 years ago. And now everybody, like the VIX is not even important to anybody's analysis any longer.
What is today's is there like a national day today?
Yeah, National Death of the VIX Day.
Let's make it the National Death of the VIX Day. Just delete it off your watch list, bro.
No, it's not
I mean,
gonna
literally,
happen until you
the only
fully
reason you
admit
keep it
to
on your
me-
watch list is to scoreboard. That's the only.
You're right.
You don't
I-
need it there.
I have
So-
kept the VIX on my watch list for years solely to scoreboard. You are absolutely right.
So why not
Listen,
just delete it? Move
Today,
on.
August 17th, we have a variety of holidays. We have National Nonprofit Day. We have National Massachusetts Day. We have
There's a National Nonprofit Day. Oh, is that like give to charity?
We have
I was going to go off on an anti-capitalism stance. Like
we have Black Cat Appreciation Day today.
Yeah,
Today
I like
is
that.
also National Thrift Shop Day, and not to leave it out, Rex Ryan, I know you'll appreciate this one. Today is National I Love My Feet Day.
I was wondering where he was going to go with that.
Oh, Rex
I'm
Ryan.
a peacock. You got to let me play. That's awesome. Rex,
All right.
nobody's throwing shade on.
We love you, Rex Ryan. You're a likable guy.
Nobody's throwing shade on Ryan.
He was always one of the most likable.
But you're never
coaches.
going to live that down, bro. But we
Listen,
love you. But you just got to accept
NFL
it.
fans in our community, they got a good chuckle at the Rex Ryan.
You're never
Yeah.
going to live that down, bro. So
Yeah.
And then everybody else is Googling Rex Ryan and feet.
Well, he might not love his own feet though. He just loves feet.
No,
It's National I Love My Feet.
Bro, you don't.
I
get it.
understand.
What are you doing here? You're
dude, the
Clarify.
joke was funny, and you're
got
like,
it.
well,
Oh,
let
what
me
are you doing?
dissect the,
Car
Can we
crash.
get back to the accuracy of what Rex Ryan was really trying
my
to do? Oh, get out
Laughed
of
my
here.
butt off, so I'm good with it. Crude light, commodities. Let's run through them, guys. Let's take a look at it as we go. Crude oil kind of stuck in the mud there. Mark, any update on
Yeah,
fundamental?
doesn't want the breakout
Hey,
here.
listen,
Of course, it wants it. Yep.
it's the thing about rising moving averages that you get in these patterns. If you never go below the rising moving average, eventually it pushes up above the next. So still a positive bullish, like until I see a catalyst, I'm not going to get excited from a directional. Still lean bullish cash flow strategies. I think they're appropriate, and a close above the 200 and confirmation the next day would only be a huge confirmation of that.
Mm-hmm. Maddie, it does want it, to answer your question. Does any of your analysis change on this chart, though? I mean, you still
No.
hesitant about the breakout?
No.
Same.
No, there's nothing. Breakout, fantastic. I'll cheer on the oil people. I know there's a lot of people at Tackle that love oil, and invest in it. The argument of the inflationary asset, not necessarily, but no, I'm cheering on it. I certainly would like to see an oil breakout here. Like I said, I know a lot of people that invest and trade oil to the top side. So I want to see it, but no, for me, it's an out for me. I need to see that higher low. I have to see the higher low. And a lot of that is just on the backs of oil confusing the dickens out of me over the course of the last 2 months. I mean, I don't know what I would have said more, Tim, if you were to say, hey, Matt, oil's going to go stagnant in an environment of crazy economic data, or Buffett's going to buy gold. Which one do you want to pick? I honestly don't know which one I would have picked. And so because oil is just really, really, really confusing given the economic drop back, for me, I need to see that trend. I got to see that trend. And so I would love to see a breakout. I'd love to see a retest of the breakout channel right there at about 42, 42 and a half by 43. I'd love to see support hold. And if support holds, Marty wants to bounce, I'm going to bounce too, but I got to see it first.
Yeah. Yeah, we need confirmation. We need something to develop. I'm still very much just staying away from crude in almost all regards, quite frankly. Gold, obviously, back up near 2,000. That sell-off has now proven to be a good opportunity for dip buyers if you did come in on that. Now, here we are back above, but we're now pushing at that 2,000 level, kind of a psychological level. I still love,
Can we
obviously,
stop?
gold.
Can we stop the fake war, Bitcoin versus gold? Can we stop
Who's
that?
still doing that? I don't read that.
Oh no, it's re-upping, Tim. It's re-upping. It's like the whole Davy Day trade had the Winklevoss twins on a video the other day, and now it's gold v Bitcoin. I saw it in like literally in headlines from financial media, gold versus Bitcoin. I'm like,
It's the
no,
stupidest thing ever.
it's the dumbest argument. You're comparing two vastly different things.
100%. By the way, performance year to date on Bitcoin is up big, obviously, but so is gold up big. They're both moving together. The analysis as to why you own one or the other is completely different reason why you'd want to participate.
No, it's not. The analysis of why you own one or the other is the same analysis. It's very, very similar. It's one might be like, well, Bitcoin is the new age and the future of what. Okay, fine. I still go back to the 6,000 years of historical argument. And so I'm still going to rely on the historical argument. I disagree with the analysis that Bitcoin is the new gold. But the reason you're embracing gold or Bitcoin is a very similar philosophy in anti-fiat money.
Let me tell you, I just had a thought.
Gold, listen, all I'm going to say to the Bitcoin crowd here, I support you. I might choose gold as my inflationary protection. That's my choice. But we're all anti-central bankers here. We're on the same team. So for the new age people that are starting to finally come of age in anti-fiat bullshit, congratulations for getting on the team. The team can pick both though. We're both fighting corrupt central bank monetary nonsense. Okay, we're both in the same, we're on the same team. We wear the same colors. We're doing the same thing. We don't need to hate against one another. Let's have honest conversations. Let's listen to one another for the Bitcoin and the gold crowd. But we're anti-central bank fiat nonsense. We're fighting the same dragon here, everybody. Bitcoin and gold is together, even though we choose separate tradable instruments. Tim, you might choose the hammer, I choose the sword. We're both charging the French.
Why not choose both? I mean, there's nothing wrong with having the hammer in your left.
Both.
Why not?
Listen, if you want to go dual wielding warrior style in having a sword in your main hand and a axe in your off, I'm fine with that. If you want to speculate a little bit in every aspect, I'm fine with that. I think there's room in a portfolio for it. But I just don't want to see gold versus Bitcoin, because then the true elitist, the people we're trying to fight, they win when we fight. We're fighting the central bank. We're fighting fiat madness and fiat nonsense and corruption at the highest level. Let's fight together, even if we disagree on the tradable instrument to invest together.
Mm-hmm. Gold is
that was a good rant. Good. That was a first-class rant. I like.
Well, I did watch Braveheart yesterday, and he tried to get all the clans together. So.
And he did a dang good job, with that attempt.
Yeah. Tim, you'll love that. Fury Warriors aren't getting nerfed.
Yeah, I like that as well, Dan.
Yeah, that's good.
Yeah, the premier class in Warcraft, no question about it. Gold and silver obviously looking good here today, Matt. I don't read the negative gold versus Bitcoin stuff. I don't know where you're getting it. I think you probably it's on FinTwit, isn't it?
It's
Twitter, isn't it?
No. I saw it in headlines of traditional media over the last 72 hours.
Mm-hmm.
And
Silver's
and it's like all of a sudden Buffett buying gold has just sparked the Bitcoin crowd of, oh, this is now anti-Bitcoin. No, Buffett's not going to buy Bitcoin anytime soon. He's choosing his tradable instrument in the fight for freedom against central bank madness. He chose his weapon of choice. That's what Buffett did. Tim, you chose your weapon of choice. You just wanted some fake, thing that isn't real. We wanted a real sword made of gold.
I thought you were going to bring the classes together here, and now you're throwing shade on Bitcoin.
That was
I
a
just
little
heard
shade.
it.
I'm
I
sorry.
heard that.
There was a little shade in
All
in
this
my
speech, you're going
comment.
to
I
unravel the speech.
apologize.
Come on.
Listen. I apologize. There was a little shade there. I'm bringing it back. We're on the same team.
By the way, look at the Bitcoin
My weapon
chart.
just really kills people. I'm just saying.
Look at the Bitcoin chart.
Bitcoin. Listen. You got to love the breakout here, Tim.
Dude.
You got to love the breakout here.
Mark, are you still playing it the way you have been through like GBTC and all that kind of stuff?
I'm doing my thing.
A Bitcoin trading account, so I don't have to make fun of GBTC, please.
Dude, money spins, man. Money spins.
You're not investing in Bitcoin, though.
Dude, I don't invest in anything these days. I just smash buttons and it works out. Like smash a button and I get more money, man. This market's great.
Yeah. This breakout is clean. It's beautiful. It's pretty. There's no question about it. Do you have some historical noise right here, Matt? I want to get a technical.
You do at 13,000. I mean, 13,000, when we broke out at 10,000, we talked about the target being 12 to 13,000. And the reason is you do have some historical. Let me go to a weekly chart here. And come on, Toss. Get your stuff together. Listen, if we're going to criticize Robinhood for shutting down, Toss, this is not even a volatile day. You're not getting order entries to the point where it's clouding that little pinhole that is a needle of all this funnel that happens into your algorithms. You're not getting that, right? Toss, get your act together. I would say, Tosh, you need to give a commission discount, but they're free commission, so I can't complain that much. But you do have some chop here at about 13,000, Tim. So I think you're with the breakout of 12 that we're seeing here today, you're probably targeting 13,000 by 14,000. The real breakout is if we can cross over 14. If we can cross over 14, I mean, you're talking 20, and you might be talking all-time highs at that point. So I don't want to call the shot here, but you are targeting 13 by 14 at this point.
It's a bull market on Bitcoin right now. There's no question about that. Chart's looking pretty. Let's go down to the dollar.
Bitcoin and gold both running together. Again, we're on the same team, guys.
Yeah. Quit taking shots then. That's all I'm going to say.
No, I'm not. That's not a shot. That's not a shot. The shot's been happening over the last 72 hours. You need to start reading more.
No, I heard you say that Bitcoin's not a real weapon going into battle. So that's the shot. All right.
Listen, that's fine. But is it? I was given the analogy of Braveheart fighting a war, and it does work within the analogy.
I like it, brother.
I mean, you had to make the sword out of something.
Same team. Let's end on that. Same team.
Same team, guys. Same team.
$DXY or the UUP next here, Matt. One thing that's not a bull market is the dollar, and so much of the backdrop is obviously on this. There were a few economic data points in currency markets that grabbed my attention. One most notably might have been in Japan, Matt. Terrible GDP numbers out of the US, then Europe. Now, obviously, it's global. We know that. And Japan came out, they reported their GDP at minus 27.8%. The dollar down here on the low. And I know we're bearish on the dollar. One of the backdrops I have about, the dollar just going into a prolonged downtrend is I just keep thinking about these other currencies, Matt. They're garbage too. It's not like the euro or the yen is something that you want to own looking at these economic data points. Little different analysis from central banks, but what's your read on currency, Matt, and any of the economic data you saw over the weekend?
Negative economic data everywhere. Central banks pumping in more money. Expect all net value of all currencies to go down, and get ready for a breakdown of gold. And not gold, but of the dollar.
Yeah, I'm looking.
All I want to do is talk gold today. That's all I want to do. It's the only thing that matters to me today. Buffett buying gold. That's all that matters to me today.
It's a wonderful day for gold. Gold's popping back up the charts. The Oracle of Omaha's coming in and taking a stake. Obviously, a beautiful day for gold, no question about it. but I think we got to just keep hitting some of the other highlights as well. We could do an all gold show, Matt. You know, we could do
Listen,
like
I like Chris's comment. Bitcoin bought the gold to make the sword. I can't disagree.
same team. That's
We're
right,
same team,
Chris.
Chris.
Same team.
Listen. The Warriors have to have the financiers.
That's right.
I'm with you. I'm same team.
I'm all about it. Let's move on to
hashtag Bitcoin Gold. Hashtag same team.
Same team. Same team. Let's move on to housing next, Matt. DHI would be an example. You can bring up any of the home builders, XHB, whatever you want. I saw the NAHB,
By
the
the way,
National Associate. Go ahead.
By the way, one of the reasons I was an early adopter in Bitcoin in 13 was because it was the same analysis as gold. My difference is I do believe Bitcoin has changed the fundamental argument a little bit over the last 7 years, but same team. Again, I told you, you can talk whatever you want. The only thing I want to talk about is gold today.
I'm good with that. So basically, I mean, here's the thing though, the Bitcoin crowd, the same argument, that's fine. But even in 2013, you weren't arguing that Bitcoin was competing with gold. That's never been an argument.
I've never argued Bitcoin
Nobody's
was
ever
competing with gold, and I'm not arguing that today either.
Nobody's ever argued that.
That's why I'm arguing the same team. It's the same analysis.
Housing numbers were the best ever, guys, I believe, is what I read. The home building index, the NAHB.
The home building index came in at 78 versus the expectation of 76. Last month was 74. That is an all-time high in confidence level for home builders there. And quite frankly, I don't blame them.
Yeah.
If there's one thing that has surprised me in the last 3 months, it's been residential housing. And at no point did we thought residential housing would crash here, but I didn't think it would do as well as they've done in the last 3 months.
They're crushing it.
Flying off the market, guys.
Interest rates are cheap.
Listen, you might be seeing a migration from metropolitan areas to more suburb type scenarios here.
I don't want to speculate on this too much, but I had a thought, and I really don't know the answer to it. So I'm just throwing it out there. Could it be that 2020 is strong for home building and mortgages and all that kind of stuff because people are still qualifying for finances on their 2019 tax returns?
Yes.
And everybody's lost income.
You don't need to speculate, Tim. That's one of the reasons what's happening.
I mean, I'm very interested because a lot of people have lost income. You know, even if people still have a job, maybe they lost a portion of their income.
My
whatever
analysis
it is.
in the residential housing will be different in 2021 versus 2020. And Tim, a lot of that is on the backs of 2018, 2019 taxes versus 2019 and 2020 taxes.
For right now, though, home builders are killing it. DHI up here, I think this is pushing near a new all-time high and just riding above that 9 EMA for quite some time here, Mark.
No, it's not pushing. It is at that all-time high and then driving some.
Yeah.
Just 25 stock, DH Horton.
An incredible company to hold. That's all I've got from broad market analysis, Matt. If you want to run through a couple sector upgrade downgrades, I think we only had a couple.
Yeah, I mean, when the simple reality, Tim, is when the market in a week of consolidation, as we've seen over the last week, you're not going to have significant upgrades and downgrades. And by the way, you shouldn't have significant upgrades and downgrades in a normal environment. You shouldn't be aggressively changing your bias to the market like you're a swing trader, right? Subtlety, conservative rankings, that's how you kind of want to approach it. And so in a week where you really just had a little bit of chop up and down, still riding the lightning, i.e. the 9 EMA, you're not going to have significant upgrades and downgrades in that environment. And I believe we only had a couple upgrades versus downgrades. We did upgrade the financial sector by 5, I believe by 5 or 10 points. I can't remember exactly. And what we'd like to, I don't love what I'm seeing here today, but a lot of the pro gold analysis today is obviously anti-banks today, given the fact that, Buffett buying gold with, removing JP Morgan, taking 25% of his position size as Wells Fargo, he didn't get out of banks like he got out of, say, airlines, but he did reduce his exposure in that area of the market. I still like it from an overall trend and pattern perspective. The breakout here off a reversal, kissing off that 200-day SMA, retraces back down. Obviously, the 200-day is going to be a very significant resistance zone for the financial sector to get back above. But what we did like about it and why we did upgrade it is on late last Friday, we also upgraded financials on the backs of that breakout here. You established the higher high. Now you're trying to establish the higher low as of right now. And that higher low can really kind of happen anywhere from 25 down to about 24.40, where the old resistance channel is that. So you don't love the price performance here today, but again, a lot of that is just on the backs of what Buffett did with his 13F. So we did upgrade that one into the positive 30, given the fact that we did like this short-term price appreciation in the higher high, and we're trying to establish the higher low there, right? And again, that zone could really happen anywhere between 25, which was trying to happen on Friday, all the way down to the breakout channel there at about 24.40. So keep an eye on the financial sector and those bullish retracements. If they do start to confirm, we'll be looking at those all week long in the halftime report. The other sector that did get an upgrade here, just a little bit of a token upgrade into the positive 45, was energy. Now, overall, we're neutral on energy. And the reason it got that positive upgrade into the positive 45, not a bullish ranking yet like we did put on finance. We do have it as a neutral ranking, leaning towards the bull side. A couple things for that leaning towards the bull side. You do have a little bit of an increase in the support levels, as you can see, from 35 up to 36.70, up to 37.50. So you did get some increases in support over the last couple of weeks. You also punctured above the 50-day moving average, establishing a higher high in this very short-term trend. If it was a little bit longer, we would probably put it into bullish territory. But in the short-term analysis, you did get above the 50. You did establish a higher high right there at 39.50. And now we're also trying to establish that higher low scenario in an overall neutral intermediate trend, because that gives us a little bit of a belief that if we do break out, you're not running from the low, you're running from a little bit of a midpoint, giving yourself a little bit more room on the breakout. So we did upgrade the energy sector. Now, most of the other sectors in the market, we maintained the rankings because there wasn't a lot that technically changed there. However, I do want to take a look at 5 specific sectors because they're doing something today that you might want to be a little interested in this week. First and foremost, we were talking about basic materials. Obviously, with the news that Buffett's getting into gold, you're going to see a little bit of a bump, but you're still trying to find that breakout. I would need to see a close above 63.20 right there at that old resistance level. That's trying to break out of a high base. It has been riding the lightning right there on that 9 EMA. So keep an eye on the material sector, especially if we can break out with those mining stocks. But also don't a lot of this space is chemical based, so keep an eye on the chemical companies there as well. Communications, XLC. Communications here is trying to form a little bit of what's called a bull flag pattern, where you set a higher high, quick retracement down into the 9, 2-day retracement, riding that 9, and then you're trying to break out here. If we do, and this is if we do break out, but if we do break out, man, some very popular names are going to be in the headlines there. The communication sector is full of brand names, not just the Disneys of the world, but you have your cell phone companies, you have your internet providers, you have your gaming companies like Activision, EA, Take-Two Entertainment. A lot of very, very popular and hot stocks. Mark, we talked about the gaming sector, the gaming industry last Friday, and we saw some numbers that were very, very impressive. So keep an eye on communications in general. If we can break out of perhaps that 60.35, see a close above that 60.35, breakouts could be the name of could be the pattern of the day when we do see that breakout. Consumer staples has been a very, very, very popular sector of an area of the market over the course of the last 2 months. We're not seeing a massive consistent trend. This one's just kind of riding that 9 EMA. We've seen that a lot of times when areas of the market get hot, they ride that 9, and the staples sector has not seen a close underneath the 9 since late June. So keep an eye on this sector as we are approaching that all-time high in this sector at 64.85. We're currently at 64.60. You could see a breakout of that all-time high in the staples sector, and you're breaking out of a short-term high base there. So keep an eye on the consumer staples sector. You get some price appreciations, and companies should see some good movement there. Two more very quickly here. XLK. The technology sector, we maintained at 20 right there on the technology. Technologies slightly with a bullish ranking. Again, it just did more like stagnation in the last week, but a breakout here certainly can be tradable. The technology sector has been a very, very, very popular sector over the course, if not the most popular sector since post-pandemic. And then the one that we've been waiting on very patiently over the last few weeks is the healthcare sector. Healthcare, we were sitting in on Friday during the scouting report meeting, and basically the analysis was, is there anything different from the week before? No. Is there anything different from the week before that? No. Is there anything different from the week before that? No. Maintain your rate, maintain the ranking right there at positive 30. But now you got the breakout. And this one is confirming. The healthcare sector is confirming after close to 3 weeks, a little over 3 weeks of consolidation. Keep an eye on this sector breaking out because she has some good price appreciation in the healthcare space.
Mm-hmm. I love that breakdown, by the way. It's one of the reasons why it was on the option report, Matt, is that even as a sector ETF, one reminder to everybody out there, you can trade these ETFs, and it was a beautiful high base, clean little trigger here. And one thing about healthcare companies, XLV has some biotech, some healthcare plans, some hospitals, medical device companies, all that kind of stuff. I love the blend of XLV. Beautiful breakout. And I think it definitely, if it can hold through the week, is in for an upgrade for next week. Review all of that content and the newsletter rankings, by the way, in the weekend newsletter from Coach Marquise. Really happy the way he's kind of taken control of that product and done a great job with it over the last 6 months or so, Matt. I think it's getting better and better all the time. Moving on, last little bit here. I got a couple of companies in the news I did want to talk about. One real quick one, not going to take long. Space, SPCE, if you can. They had to bump back their maiden voyage to next year. Obviously, financing issues. This is a company that loses a lot of money currently because they're not actually collecting revenue. They got a lot of people on the hook say that they want to take one of these really expensive flights, up in hyperspace, wherever the heck it is, Mark, above the Earth's surface. But here's the problem. It's a $4 billion valuation. They don't currently make any money. SPCE was a beautiful breakout about a month ago. Now it has really failed. Mark, have you taken this one off your radar? I know that you were interested there a while ago. I was as well. I love that breakout to trade. Now it's just getting negative news and under pressure.
No, it's one of the stocks I follow. Obviously the technical pattern's horrible, so you don't trade it. Coming against the 200-day moving average, which held as support the last, 4, 5, 6 times it tested it. Mm-hmm. So terrible trading pattern, but it's one of those companies that, like in 2020, when it can give you a nice 3, 4, 5 day pop on the right news, the right technical setup. It's just terrible right now.
It's a hype train company. There's no doubt about it.
It's a story stock.
Yeah, it's a story stock. That's right. Speaking of another story stock here recently, Kodak. I just have to bring this one up because of what Peter Navarro said about
What's Kodak symbol again?
KODK. KODK.
Yeah.
Peter Navarro, speaking of Eastman Kodak, had some very, very blunt.
Let's hear the words. I want to hear the words from Peter Navarro.
Based on what I'm seeing, what happened at Kodak was probably the dumbest decision made by executives in corporate history. You can't fix stupid. You can't even anticipate that degree of stupidity.
I like what Peter Navarro said about this. It was stupid, and you can't fix stupid, and there's going to be people that go to jail for this one.
And I hope they do.
No, there will. This is insider trading, is what it is, and so this is ridiculous. I said it at the time. This was a nonsense deal. I didn't like it. I said people are going to go to jail. I said there was insider trading going on. And it's about time Peter Navarro woke up to what everybody knew 2.5 weeks ago.
You can't defend this deal. I mean,
You
they
can't
put the
defend
whole
the
thing
deal.
on pause. They're doing an investigation. Kodak's doing their own internal investigation. I mean, it's very likely this whole thing falls
Okay,
through.
Kodak, you're doing your own internal investigation on the internal situation for, okay, thanks, Kodak. That's like
Yeah.
that's like when Alabama says we're going to investigate, our own crimes, and we're going to give ourselves a, we're going to give ourselves a summary judgment against our own crimes. No.
That's
And
like Enron doing an internal audit.
yeah, that's like Kenneth Lay being like, "Hey, it's all good. It's all good, man. There's
Yeah.
nothing to see here. Get out of here with that internal investigation." People are going to be in jail. People should be in jail for this. This is a casebook example of insider trading. CEOs and insiders have to file regulatory reports when they increase or decrease position size in a publicly traded company, and that has to be disclosed a long time before it actually happens. This was obvious case of insider trading, and with the greed, especially in an environment where so many people are struggling, where so many Americans are really struggling from a financial perspective, to see this jackass try to make millions and millions of dollars off a government's basically bailout of $700 million. Peter Navarro said it. You can't fix stupid. I would have harsher language, and I guarantee he would have harsher language if it wasn't a public channel. This is ridiculous. It should be punished to the full extent of the law. This guy should be used as an example for other idiots like him so that this does not happen again. Throw him away, throw away the key, publicly shame. I don't care. This is ridiculous behavior, and this is why generations are growing up hating capitalism, because they associate this with capitalism. This is not capitalism. This is just pure and simple corruption and greed, and it should be punished by the full extent of the law.
No, I said that a couple weeks ago. It's like, listen, this gives these type of things, and Matt, you and I are very conservative. These type of things give the AOC crowd ammunition for years and years to come. And it riles up because it makes people mad, and they get embarrassed. Like, we got to stop this.
And go ahead, Mark. I'm sorry.
No, and it's just it's you have to, regardless of political ideology, just be like, condemn this. It makes America worse. It makes our markets worse. And this kind of, I mean, Peter Navarro, was it like, what was it? I mean, that's a great line. You can't even anticipate that greed.
But what do you have to say about the individual that approved the plan in the first place? So Peter Navarro can sit there and throw shade right now, but he's got his fingers all over this deal, and so does the Trump administration. I call balls and strikes, guys. I think Pelosi should have been criticized earlier today, and I think the Trump administration and Peter Navarro should be criticized for gift wrapping $765 million in funny money in a gift to a company that had no business being in the pharmaceutical space in the first place. So Peter Navarro, you can sit there and throw shade all you want. You got your greedy little fingers on this deal. And so, yes, I get the strong language. What do you have to say about your own administration for approving the deal?
No, he's just mad because he's like, come on, man, we were trying to make you guys rich and you had to go overboard like this. I think that's
you're going to be satisfied with like $3 million. You had
extra bonuses. 40. You had to go buy a ton of shares before. I think that's the level of stupidity.
You had to get the Jerry Jones yacht. You had to do that.
So,
man, you guys watched Wolf of Wall Street way too many times.
Dude, I wonder what happened on the Kodak email threads, and that day they got the news. It must have spread like wildfire or something like that. The word must have got out or something like that.
Absolutely be a Department of Justice investigation into what happened here. There should absolutely, guys, we're talking $765 million in people's money. We're not talking about government selling iPads here. They used the people's money to funnel $765 million to a company that was not even in the pharmaceutical space. That was a failed bankrupt company that has ties to certain government officials. There should be an investigation 100%. The criminal liability is on the insider trading. The political liability should be based on the investigation. This is all wrong. There is not one thing in this Kodak deal that was right, not from the inception to the conclusion. It was wrong at the first, it was wrong when it was announced, and it is wrong today. Wrong is wrong and right is right. I'm sorry, I'm so sick of how big the gray area is getting in America. It was wrong. If it was a Democrat who announced the deal, we would have eviscerated that Democrat. If it was a Republican who did announce a deal, they should be eviscerated as well. This is criminally liable negligence.
Yeah. Yeah. Well, and the story's not going to go away because they're still waiting on the results of those investigations and all that kind of stuff. So we'll see what that
So
thing
Matt, let me get
happens.
this right. Are you going to sell any naked puts on Kodak?
No, I thought your naked puts.
I didn't even want to ask you because I bet you still do have naked puts.
He probably does.
I bet you, of course he
He's
does.
like, yeah, I'm willing to own it at $2 because it might go through.
Game theory. I love it. All right, guys, that's all I got here for today. There's
I
some
just think
really,
you got to
really
be consistent, Tim. You know me on that. And I know sometimes, my analysis on things kind of pushes some political buttons, but you got to be consistent. You got to call balls and strikes.
What is
You
it about
gotta be
politics where
consistent.
people are lacking consistency in terms of critiquing?
Because it's your boy.
But here's the thing.
That's
I was just
what.
thinking
It's
about
your
this.
girl or your boy. You put the beer goggles on when it's
But we don't
your
do that in
boy
other
or
areas of
your
life.
girl.
We
Listen,
don't do that.
my daughter yesterday, my daughter did something on Roblox that I felt was wrong, and she thought she was getting scammed. Guess what? 2 hours later, she had a nice little understanding of how trade policy actually works. Call balls and strikes. I'm not going to be like, oh, honey, Kateria, it's okay. You're my daughter. No, I don't want her to grow up to be one of those you can't fix stupid people that Peter Navarro was talking about today. Be consistent.
But like, if I'm a fan of like a football team and my quarterback sucks all the time, I can call it, man, he's not very good. We need a new quarterback. But with politics, it's like a lot of people can't criticize
I've been
anybody
saying that
on
about
their own
Mitch
side.
Trubisky for 4 years. You've been defending him. What are you talking about?
Well, we've got a new young man in there competing for that
He's
job.
not a new young man, bro.
We'll
He's
see.
not a young man. He's as old as Mark. What are you talking about?
My advice to everybody in politics is find principles you believe in, whether it is liberalism or conservatism or
Just believe in
libertarianism. Find the principles you believe in, and then if people adhere to those principles, support them. And if they don't, criticize them. It makes life a lot easier, and you're a
Listen,
lot more
And
consistent.
if you want to separate the financial analysis from the political analysis, keep your greedy little political fingers out of a free market, and then we won't have to talk about political bullshit.
Are we ever going to have a free market the rest of our lifetime?
No,
No,
Probably not, right?
No.
politics is way too important to the financial world.
Yep. Let's move into final thoughts here, guys. Obviously Monday morning, setting up the entire trading week. We got a lot of content here throughout the week, including this show each and every day. We'll be coming back to. We're going to be doing our podcast
Doesn't
tomorrow.
Enron have to be the worst case of fixing stupid, though?
It's pretty bad. That's a good question. Before I just answer yes or no, let me think about it, because that one woman who drove up her company to like 20 valuation that had zero sales, that was pretty stupid too.
Okay, we just call that Nicola. All right.
Right.
I get what you're saying. The pharmaceutical woman that basically was $2
Couple
billion
years ago.
valuation and it was all built on funny math. No, I'm with you. But that Enron was billions and
It's his
billions
story.
of dollars. Oh, what about? I'm thinking about all those criminals on Wall Street doing this stuff. What about old Bernie Madoff, the $50 billion hedge fund Ponzi scheme?
Yeah, that's obviously a big one. But that's just corrupt. That's just
that wasn't. Yeah,
that's not stupid. That's just corrupt. You could call it stupid, but I think the stupid part of Kodak is like, did you guys really think that you could get away with something so
No,
transparent?
the insider trading, I mean,
the-
over this
Dude,
still.
the day after it happened, we were like, and look at the volume on the day before. Somebody knew. Like, you
Anybody
don't
with
have
half a
a
brain.
like 8,000% spike in volume and be like, before the deal's announced, and be like, oh wow, lots of people knew something.
Yeah, I agree. Mark, final thoughts for our team out there, wrapping up our Monday show, getting ready for the week. What's on your mind?
Same thing that it's been for a long time now. Like, we didn't even touch on the China stuff, but there's a lot of things that can go wrong with this market, but it never does as far as in the price action. Things just keep going up and up and up. When you have these bullish euphoric moments, don't be greedy, don't be a Kodak executive. Place your few trades, make your money, have a diversified trading plan. Don't be over leveraged and take advantage of the market conditions. Just don't be greedy about it all, because there will be a day coming up, right? I read somebody said something this weekend that I thought was just spot on. 5 to 10% corrections are normal. They're totally normal throughout the years in market conditions. If a 5 to 10% correction happened soon, people would think it's the end of the world. And so don't put yourself in a position that if a normal 5 to 10% correction ever happened, you are losing
If
sleep.
a 5 to 10% correction happens and you lose 30% of your portfolio, there is something vastly wrong with the design of your portfolio.
You're
So,
over leveraged. It's simple.
You are over leveraged. You have too much correlation, and you have too many growth stocks.
Yeah,
And so if you lose sleep over the market's going down 2-3 days, or that's impacted you in the past, you need to look at the balance of your portfolio. And by the way, we all get unbalanced. It happens in the natural course of position sizing versus price appreciation or depreciation. These are conversations that you should be routinely having with you and your portfolio in terms of the balance. Jake, you guys know Jake very well. Jake calls me up the other day and he's like, Matt, I'm a little worried about my position sizes in commodities right now. And I said, well, where did you start and where are you at right now? And obviously people that have been investing in gold, they have a higher percentage of their portfolio in gold than what they're typically used to because of what's been happening with the price appreciation of gold. And I said to Jake, Jake, first of all, that's a good problem to have, right? Gold is overabundance in your portfolio, not because you initiated a position size that way, but because it grew to that level. That's a good problem to have. And we had a very, very, direct and important conversation about how he could reduce his exposure because the percentage of his portfolio in metals was a little too high for his liking. So he actually reduced some of his exposure, not his bias, but he reduced some of his exposure in the market simply because it had outgrown what his comfort level is from a portfolio perspective. Once again, these are conversations you should have between you and your portfolio as you go about the navigation of portfolio design. So, these are just conversations you have to have all the time in position sizing versus where they are in relationship to what your design of your portfolio is.
Yeah, and it is a good problem to have when you have price appreciation, you're making profit, then you got to reassess it. So, definitely wise words that you gave Jake there, and to start thinking about how to break that down.
Oh, you have no clue how hard it was for me to be like, yeah, you might want to sell some gold. It was so hard. It was so hard. But for the design, that was the right decision. He had far enough, protection from a hedging, had far enough protection from an inflation. And quite frankly, if we get one of those days where margin calls happen and silver and gold take a dump, he probably would have been hurt. So it's just a conversation you have to have.
Yeah, I agree. Any other thoughts there, Maddie, before we wrap this one up?
No, the last thing I'll say is we are not going to be recording the podcast today. We have some scheduling conflicts with the podcast today. We will be recording the part 3 of the history of currency tomorrow. I really hope you guys enjoyed part 1 and part 2 as I was just kind of detailing the history of currency. And tomorrow we're going to get into the the thing I hate doing, but everybody actually likes doing, and that is widely speculating on the future of currency and, quite frankly, the future of the dollar and the future of the reserve system in general. So I hope people understand the historical, just the important dates in time of what happened from a historical perspective. And there's, like I told you and Mark, as we're getting ready for that third edition, that part 3 of the podcast tomorrow. This is not me outlining the historical situation. This is us having a conversation, because that's what it is. Nobody knows for certain what the future of the currency systems are going to be. There's obviously people that have better takes than others. There's obviously more well-informed opinion than others. But at the end of the day, it is speculation, because we're not sitting in the boardrooms at the IMF and the Bank of International Settlements and the World Bank, and we're not in those political discussions. So it's a little bit of reading the tea leaves, and I'm certain we'll have some opinions on where we feel the future of the currency systems are going to be.
Yeah, no, I'm looking forward to the conversation quite a bit. So,
and this is not going to be shocking to anybody given my take on gold, but I do believe that the fiat experiment will be a dead experiment in our lifetimes. It's just a matter about what replaces the fiat experiment. That does not mean the death of currency, by the way, because fiat and paper you can have a paper-backed currency. Fiat is faith-backed currencies. I believe faith-backed currencies are going to be dead.
Well, obviously that conversation that you and I and Mark have tomorrow is going to be fascinating from my perspective, and I'm very much looking forward to it. I don't know. I have to think through that. I'm thinking through the whole thing, quite frankly,
Man,
Matt, because obviously
we must be getting summer, because we're getting Ukrainian robots coming in. I like it.
we're getting Ukrainian.
Oh, never mind.
I don't know what that
Move
is.
on.
So, all right, guys. If you've enjoyed the show at all out there, by the way, give us a click on the thumbs up, subscribe, click the bell, come back and join us each and every day. All of the weekend reports are posted with all of our weekly picks and all that kind of stuff. There's a lot of really, really good setups, by the way, out there. In fact, there are many, many that caught my attention, Maddie. If you want to just look at one real quick, UNP broke out, lumber liquidators. Look at LL off the stock report. Did you see this?
There was a couple here that I wanted to quickly cover. Lumber, and it's going to be hard to do rapid fire here. Lumber liquidators here. Wood's breaking out. Look at that. Nice little breakout there. Confirmation. Keep an eye on that one. That was a good little trigger.
That whole pattern is so beautiful. Pull back to the 20, orderly, come back up. Like
it was a good
that
one.
pattern is why you can achieve all your financial dreams, because technical analysis works. And this market is becoming more and more technically consistent. It's a beautiful thing.
And again, toss is very, very slow here, Tim, so I can't really rapid fire here, but I'm looking at the exchanges here, both the CME on the stock report and the ICE exchange on the options report, both setting up, both breaking out here today. One more strength, that would be ICE versus CME, a little bit more bottom feeder. KHC, ZBH, Echo Lab, ZTO, all in the stock report, setting up really, really, really nice for confirmation today. On the options report, there's, like you said, UNP and Monster, Halliburton, NUE, all setting up as well. So I would say about a third of the reports so far have either set up to confirm today or are confirming. There was only 2 or 3 stocks that kind of got blown out of the water, just didn't ever confirm. Still working off those watch lists, though. You're on mute, T.
No, I agree. And as always, but obviously we work off those watches throughout the week. Some stocks confirm on Monday, others confirm on Tuesday, Wednesday, Thursday, Friday. Some don't confirm, and then we kick them to next week or whatever it might be. So if you're a pro member, make sure that you review all of those reports on a Monday or a Sunday night over the weekend. Mark also did his prep class last night as well. That recording is up on the website. If you're not yet a pro member, there's a 15-day trial in the comments below. It's a pretty standard offer that we always have. Come and join us, see what we do over at Tackle Trading. And we will be back tomorrow with the halftime report. Same show, same station. Have a wonderful Monday, everybody out there. We'll see you guys tomorrow.